The markets are back open after a great July 4th holiday, and there is plenty to talk about today. We have FOMC minutes. We have the latest news out of Meta that is pumping their stock. Before we get going, nothing we say is financial advice. Kevin and I are not financial advisors, so please do your own research before making any buys and sells. Hit that like button. Subscribe to our channel if you have not yet. Kevin, we are seeing markets, markets are pretty flat on the day for the most part. The NASDAQ is up just a little bit. S&P down a little bit. Dow is down about a third of a point. However, Meta is on an absolute piss missile today, approaching $300 a share. You were mentioning earlier that there is some resistance at 304, but this is on the back of news that they are dropping their Threads app tomorrow. Curious if you've been keeping up with this at all and what you think is going to happen moving forward.
Yeah, I mean, I know very little about what's actually happening with Threads. I knew that they were coming out with a competitor to Twitter. Well, whether this is going to be, the replacement, I think we also got to look at Jack Dorsey's, Blue Sky. So it seems like there's a lot of Twitter competitors.
Yeah.
I mean, even if you want to throw Parler in there, if that's still around. But it seems like, this is probably the most upfront one that has any chance of competing with Twitter. Do I think it's going to be, the Twitter killer? No, not at all. I think Meta is spreading themselves thin. They've been going into a lot of different fields. Why is that? I don't know. Maybe stupidity. I think you got Instagram, you got the Meta shit, you had Facebook. I think Facebook, you had a good thing going, but, obviously you wanted to make more money and ruin more lives. So here we are with different social media platforms that we're trying to acquire and change the world with. But I think that this is definitely, like you and I talked before the show, a sell the news event. It seems like an extremely bullish thing to be coming out, bullish being light, right at the end of a pretty big move that we've seen this far into this year. So I'm not necessarily convinced, even if this thing does become pretty huge, that this is going to be a long-lasting, sustainable move for this push-up today.
Yeah, from their lows in October of last year, late October of last year, they are currently up 230% in a little over 8 months. That cute. Is absolutely wild. Yeah, cute's one way of saying it. It's been, I find it interesting too that we have all this Zuckerberg versus Elon Musk, cage fighting nonsense. I want to see it too. We had this last weekend, Elon announcing on Twitter that, you're going to be rate limited with how many tweets you could see based off of if you were a verified user. So, try to get more people to pay for Twitter Blue. And I know that Meta has been working on Threads for a while. I'm wondering if they're rushing this out to try to capitalize on that. Was the plan always July 6th? Or did they see this going on and be like, what? We got to get, even if it's not the final version, we got to get something out now to try to take advantage of Elon's missteps with Twitter, because there have been plenty. The bots are out of control on there. With Threads, you're going to be able to just easily, you just log in. I believe the way it'll work is you'll log in with your same, email and everything, and all of your Instagram followers, all the people you follow, will automatically be, connected. You'll have your same username. Don't have to fight for your username again. So that's interesting, but it really does seem like it's one of those sell the news events, right? Like a 3.5% move up today off of this news, and it's still a risky bet. And like we've seen with a lot of other losing propositions of Zuckerberg's, Facebook worked out, but he does better at acquiring other things. It's been many, many years since he innovated anything. And so do we really think, and this is what I've been asking myself, whether or not I want to short Meta, is do we really think that the Instagram users are going to use Threads in a way that makes it profitable? And I'm leaning towards no. I think, if Instagram users wanted to read Threads and wanted to take in their information that way, they would be reading it over. They would have already been on Twitter reading stuff. And there is a big, different people like to take in information in different ways. If you like to read more, you're probably on Twitter. If you're more of a visual person, you're probably on Instagram. If you like, cute little dance videos, you're probably on TikTok, right? So there is, different people absorb information different ways. And I don't necessarily agree that the Instagram crowd, I don't know if this is really all that great for Meta's P&L long term, right? Could they make more ad revenue? Sure, absolutely. Could they also end up wasting a lot of money on this? Yes. And so you have to ask is which is more likely? And to me, I feel like the more likely one is this ends up burning a lot of money and they it's not great long term for the balance sheet. So I don't know. Like I think it's more likely that Twitter turns things around than it is that Meta launches something that defeats Twitter and brings them down long term.
I'll tell you one thing. The only way that Threads makes a lot of money through ad revenue is if Blue Chew just starts shooting out videos nonstop on their platform. I mean, just for a second, on Twitter, I cannot stop seeing these Blue Chew things. Like I don't even interact with them, but they just keep popping up in the top of my feed.
Yeah.
Like of the 600 that posts I get to see per day, like 500 of them are Blue Chew. So I don't know if Elon's just like fucking with me or what, but but in all honesty, I think that you made a really good point. A lot of Instagram users are there for the visual aspect of it. Maybe it's good for some creators, like maybe, again, I'm getting too in depth with it, but like maybe like a lot of the cooking creators and stuff like that you see on Instagram, that might be somewhat beneficial. But for the most part, Instagram is pretty much just like, okay, I mean, they're even branching off into Reels now too, right? Reels to combat TikTok. So it seems like all these industries are kind of fighting each other for something that they don't necessarily, excel in particularly well, or didn't, reinvent the wheel with, and they're all just trying to compete with each other. And for the most part, I think Twitter has a pretty good chance of coming back too. I mean, it's not like they're going anywhere. I'm not leaving Twitter. I still love Twitter. As soon as I can get more than 600 posts a day, I'll be very happy with Twitter. But I think that their biggest thing could potentially be, starting to monetize videos. I think that's going to be the, Twitter's huge pull if they're in their market moving forward. We see, YouTube, censoring tons of videos and stuff like that, or, demonetizing certain videos. I think since Twitter, for the most part, since Elon's come over, has been pretty open source for anyone to post whatever, really. That might be the place where you start to see a lot of creators going to. I don't necessarily think that you're going to see that from, Instagram or YouTube. It's still a good volume, but it's not going to be as substantial as I think Twitter will be in, the coming years. So I'm still bullish on Twitter, even though I can't really buy the stock anymore. But for Meta, I think that we are seeing some resistance. And again, it's one of those things where they're venturing off into a field that they aren't necessarily great at, and they're trying to compete with someone who's done it pretty well for a pretty long time. So it doesn't matter who the CEO of Twitter is now or who it was. I think that I think they're getting ahead of themselves, in my opinion.
While we're talking about Meta, why don't you go ahead and pull up the chart and we can look at that, and then we'll move into discussion around the FOMC minutes, and then we can talk about crypto from there.
Definitely. Let's pull up this insanity right here. All right, Meta. Whew. Look at this chart. I decked it out today. You guys excited?
Oh my God, I can't even tell what is happening anymore.
Bad things are happening, JWeb. Bad things are happening by no fault of my own. All right, let's go in deeper and see where we are on the monthly chart. We can see on the monthly we're completely overbought here, right? That's pretty insane. It's not surprising. What the fuck, trading? To get out of my face. All right, here we are. Completely overbought on the monthly for about 3.5 months, right? It's just been, you haven't seen a red month since October of last year. So since the low, it's been green just nonstop. That makes sense. Again, though, even on the way down, we saw some green months, right? We found a bounce there, found the bounce there, found the bounce there. We did see some pullbacks. It'd be more so on the weekly, but even on the weekly, if we take a look at that, pretty insane, right? Like maybe 1-2 red weeks and scattered throughout, but it's pretty much green all the way up. But you're probably wondering, what are all these yellow boxes, right? We have to go to the daily to see that. So these yellow boxes are pretty much gaps that we are seeing in the price from one close to the open. And we can see some pretty substantial ones here. Like there's one right here on February 2nd, so Groundhog Day, to the 3rd, where we see a massive gap. And this gap is, let's say, from here to the open, which is probably right here. That's a negative 23% drop that we saw, right? That's a huge drop that created a huge gap. So, on the way down, we did create a bunch of gaps. We created this massive one here, and we created one down here, which got filled on the way up. And even on the way up, we've created a few gaps that, pretty much price tends to fill at some point. But this moved all the way we got to here, filled this massive one that we saw that filled that 23% drop that we got back in, February of 2022. We finally filled that out here in July of 2023, and we are nearing some pretty important resistance. I think I said 304. That's my target. I think that we'll see a wick up to there, but for the most part, 299 to 298, 298, 299 to maybe like 309 seems like it's going to be extreme resistance. There's a lot of rejection or support that we found, but now since we're below that support, it's become resistance, and we have to see if the price is strong enough to go above it. But then again, we are overbought on the weekly completely, right? Been overbought on the weekly for a long time. We're at 100 right now on the weekly for the past, I don't know, like 5-6 weeks. And then we go to the monthly, completely overbought here for Meta as well, right? So we're just seeing this massive overbought, part of the cycle where you're also getting bearish divergence on the monthly where the volumes are coming down, but the price still continues to push up. I'm not bullish. I got this this trend line here. This is a ABC correction for Elliott wave theory. I think this is what we're seeing could be potential flat correction. I could be wrong, but I think it's a flat correction where we see, something similar to wave one goes all the way down. It has to be at least 60% of a drop and, 3 waves within it. And then we get a 60% bounce from here. And we definitely put in over a 60% bounce from here where I think we're at. But yeah, we're like 231% from where that was. So that's a pretty good move. That tells me that, okay, this is still valid. Now we would have to see at least a 34% drop here from the all-time or from the height we are currently seeing. And, that would put us somewhere around, right around here, right around 190, which seems reasonable, right? But I think that we are going to push it a little bit deeper. And I don't think that we're necessarily going to go very far underneath where we already went for, what was this, October of 2022. I think that we might just drop a little bit lower than that to around $71, $72. That makes sense to me if this is valid. But, the last time it was completely overbought, we went from, let's see, height up here at, say, 380, all the way down to where it's completely oversold at 295, and that was a 77% drop. Let's just for funsies say 77% drop from here, right? Just for fun.
For funsies. Yeah, just for funsies.
77% drop, that would put us at $65. So just keep in mind that this is very possible that things like this could happen. I think that, again, I don't see any value necessarily.
Hold on. Very possible that we could see a 70% drop.
I think, okay. Let me take away the very. It's
all right.
Possible.
Let's be realistic here.
Okay. But when it's, if it's at $65, 18 months from now, or at least hit $65 18 months out from here, then we're going to go back and edit this and put the very in front of the possible. But when I'm looking at this right now, I think that it is possible that we could come down for a double bottom, maybe a little bit below it, and then that could set us up for an excellent bull run, right? But I don't necessarily see the value in Meta right now. I don't think that Threads, the actual metaverse that he spent billions of dollars into, even though we saw a massive sell-off right after all that, I don't necessarily see the value in this company at all, especially not the valuation that we're starting to see. And then let's put it this way. Do I think that we're putting in an all-time high in this bull market? No, I don't necessarily think. I think that what we're seeing is we're filling gaps that were left out, but we did it in such a massive way. And we're also seeing tons of shorts that don't believe in this as much as I don't believe in the stock, to the point where it's easier to push this price up and liquidate. There's money to be made to the upside, right? There was a massive candle down. Now let's just push it all the way up to the point where people start to get exhausted. They start closing their positions and people start opening up positions because we've changed the entire situation, right? We went from a bear market where it looked like shit at, $88 or whatever it was down there to, it's close to 300, and people are getting excited. They think we're in a bull market. Now we know that all the money's to the downside. Again, what are the things that we're seeing right here? Very similar to Bitcoin. We got a massive gap here, massive gap here, massive gap here. These are on the daily from the close to the open. The price has fluctuated so much that these tend to be filled, right? This one here has got to be filled. This one's got to be filled. So at the very conservative level, I would say, maybe like 150. That would definitely be where we could see best case scenario bounce, and that would be the end of this. But I do think that we are going to have to go down a little bit lower.
I love how your best case scenario is still. I love how 50% down is still your best case scenario. Like, I don't know if there's anyone in the world as bearish as you, Kevin.
I know, man, but I'm convicted as can be, and I'm not going to let these guys. They're not going to fuck me up here. I'm out trading them, JWeb. I'm out trading them.
I respect the level of conviction. As someone who takes in a lot of financial news and listens to a lot of this stuff, you can hear it in people's voices. These CIOs, these, these big traders who are managing billions of dollars, hearing them talk on Bloomberg, day in and day out, week in, week out, their tone, they're exhausted of being bearish. And I think there's just a really good chance that a lot of these people are just giving up because they're so they're like giving up their bearish bets. I heard one guy say today, his company had been forecasting a 10% pullback in the TradFi markets. They've given up on that number. Now they think it's only gonna be like 2 to 3%. And I'm just like, oh, buddy. We talk a lot about exhaustion in price on the way up, that there's not enough buyers. But I think we also need to be aware that there's exhaustion from people being bearish, right? Like it's pretty mentally draining to be bearish. And for a lot of people, especially with money managers, when they have been heavily in cash or in bonds that have been outperformed in a big way by tech, a lot of these people went risk off. They took their tech positions out. Now they have to answer to their clients why, tech is up so much this year, and they are up a fraction of that. So it's setting up an interesting dynamic where market makers could absolutely be seeing this exhaustion from the bears and just waiting for them to buy back in and then pulling the rug out from under them.
I'll say one thing. March 2000. That for all these stocks that have been holding up the NASDAQ, March 2000. I think this is the dirtiest bubble we could possibly see in the past decade. And again, how much has tech gone up since the beginning of, say, Facebook being publicly traded, right? A lot of these other companies, Tesla, it's pretty substantial how much these have absolutely gone up. So it doesn't surprise me that the prices caused some stocks to go into all-time highs, which is pretty wild considering we are in a bear market still. And it does make sense because a lot of people do expect this market to collapse. Like our normal understanding of how economics work and how bear markets and recessions work is that we would be necessarily still bearish considering the outlooks, considering that we're expecting rate hikes and a bunch of other stuff that's going to contribute to, quantitative tightening. But what we're seeing is the price continues to go up and we can't really explain it. And that's where you're talking about that exhaustion, and it makes total sense. Like, why wouldn't you keep pushing the price up to make all this money, right? And then guess what? Yeah. When people start to go into it, there's more money to the downside where it naturally should be. And when it does correct, it's even nastier because we lied all the way up. And I'm not saying lying is a conspiracy, like being a conspiracy theorist or anything like that. I just mean like we're lying to ourselves, believing that, the worst is behind us. I tweeted out the other day, the only way to get out is through. And that's the only way you can get out of this bear market. You can't, hope that everything's going to work out and be, sunshines and rainbows on the other side. It's right now, it's not that situation. I think we feel that way, but I don't think that's the nature of the world that we live in. So it'll be interesting to see, but I definitely agree with you. I think that a lot of people who are bearish that have been convicted, they're starting to turn, and that's not a good thing for at least them, most likely. I'm not going to say anything advice, but
listen, even the experienced traders, experienced money managers, educated people can fall victim to FOMO. They can get exhausted from being bearish. They can have people up their back about why they need to, why haven't I made as much money? We should.
Banks do it all the time.
Banks do it all the time.
Like, they go under and they get bailed out.
It's very much a possibility. And you talked about interest rates. So let's transition into the FOMC minutes that came out a little bit ago. Nothing too earth-shattering in there. Yeah. It does seem like it was a little more split on whether or not they should do 25 basis points or no hike, which they landed on, than what Powell had said, right? Like, it made it sound like it was pretty unanimous. The minutes suggest otherwise. There were quite a few members of the Fed who wanted to push another 25 basis points, and it makes sense, right? Like, we see if we're being data dependent, let's be real. The core PCE number that the Fed looks at has barely moved since December. Like, what about that gives you faith to think that, okay, if we wait another month, that number is going to improve? And they won't even see the next reading until after the July meeting. So we really only have a few more big reports coming up. It's unemployment on Friday. We get JOLTS report Thursday. That's, a good number to look at. But the big one is the unemployment rate on Friday, which current expectations are that the unemployment rate is going to go down to 3.6% from 3.7. And then we have CPI next Wednesday. And, the expectation is that's going to go down a little bit. So is the Fed like they're going to hike in July? They're going to hike. It's 3 weeks from today that we'll see that next number. That's actually a really big day because we get the Fed rate decision and also it's Meta their earnings. So I think that's going to be really interesting to see what happens with the share price going into that. Like, do you want to short now heading into this sell the news situation, and then 3 weeks out you got earnings? I'm not really sure how to best play that one, but the Fed made it very clear that they're still forecasting diet recession, mild recession, recession light, whatever the hell you want to call it, later this year, and then a moderately paced recovery after that. And markets still are only pricing in one rate hike. Like I'm looking at this now, and we have it priced in to be between 525 and 550 after the July meeting, but that's not priced in. Right now, this is only showing a 17% chance of another 25 basis points in September. And I personally don't agree with that. The markets are expecting it to be, this model I'm looking at is showing that they're expecting the hike to come in November, which wouldn't make sense. Like if we have a meeting in July, no meeting in August, then they're expecting, I think the markets are so fucked in the head right now that no one really knows what to do. Like, what I'm looking at with the Fed funds probabilities is 25 basis points this month, nothing in September. So that would be August, September, October, 3 months in a row where there's not a rate hike, and then 25 basis points on November 1st. Like, I don't get it. That doesn't add up to me. Maybe that's just my primitive brain and my lack of understanding, but that doesn't add up. I'm not getting it. So I think the markets are just setting themselves up for disappointment. Everything that we've seen lately, it's like, what is priced in, and does it, do we get news that improves that outlook or worsens that outlook? And right now, I don't know how much news is going to really improve that outlook, especially on the data side of things.
Yeah, it's so, it doesn't really make sense, does it? Right. No. I don't see why they would halt for 3 months in between to just raise another 25 basis points. That seems counterintuitive, right? That's almost like asking for it to, spike up just a little bit if nothing really changes. And then, we'll throw in another 25 after we get a little bit of a spike, just a little bit. But that doesn't seem like if that's the play, doesn't seem like that's a Fed that really wants to get this under control. It seems like they're just trying to keep stuff, from absolutely breaking. But and again, there's so much that just doesn't make sense. If they continue raising rate hikes or even just keep them as is, let's be real. This is 5 to 6% that these rate hikes are sitting at, these funds rates. How this is affecting consumers, this can't be good. The longer it stays this high, is the worse it gets for, everyday people. So I don't necessarily see, they've been resilient. I will give them that. They've been resilient as could be this entire year, but it doesn't prove to me or, give me any confidence that things can get any better anytime soon. This seems kind of like a lackluster approach to bringing inflation down, that 2% that they seem like, we're data dependent and we're so eager to potentially, get there by maybe not this year, maybe not next year, but the year after. So just stupid to me, in my opinion.
Yep. Agreed. We got a few minutes left. Let's quickly go through a few of the crypto charts. What have you been paying the most attention to? Everything is looking red on the day. BTC dominance is up a little bit. What do you want to look at? Let's keep it, actionable if possible.
For sure. Let's bring up the big boy Bitcoin, right? Main thing we got to keep up with him. Obviously, we are in this supply zone. We get rid of this. We don't need to know. Binance already fucking minting everything. They're going to manipulate the market as much as they want. But I digress. They have nothing important for me to talk about today with them. But we go to the daily chart, and I just want to pull this up, right? Initially, when I was looking at this, I thought they were breaking out of a parallel channel. And again, I could be wrong too. I definitely admit that I looked at this the wrong way. I thought this was a parallel channel, right? We're putting in lower lows and lower highs. However, we see where we are now. This daily stochastic RSI has to come down, and it seems like the price is gravitating lower, but it's going in a different channel. I think this is the channel that we're looking at. And again, that shows that this blue midline of this parallel channel is finding some support for here. That's why we bounced off of it. Do I think we have a chance of going lower to 29K? Yeah, it's possible if we're within this channel. However, that does build us perfectly in a position to shoot up to 35K. And again, that's very similar to what we were talking about with Meta, how we get those gaps in futures. Well, I mean, we've seen the gap in 34 to 35K for CME. We saw the gaps in Meta. I think that's where the price is going because that's where a lot of the liquidity sits. So I think that we're putting in this parallel channel. I would like to see if we come down here over the next few days. Makes sense considering the daily stochastic RSI would be coming down as well. So I think that we are going to be heading down towards the bottom of this channel. Doesn't necessarily have to go below it. I think that we would break out of it because then we'd be putting in a perfect bull flag for continuation. But I would like to see how the weekly progresses because the weekly, I believe, is, yeah, it's getting towards the overbought. So maybe we get down for a few days in lower time frames, but the higher time frame is telling me that we still have some room to push up. And that would make sense if we do break out of the supply zone and we go towards that 34, 35. From where we currently sit, where that 34, 35 is around, 13%, I would say 12, 13% to where we get tap into that zone. We can get a wick up there and it could be over very quickly. But I mean, that lines up. We're not overbought yet on the stochastic RSI for the weekly. That would be, that would definitely push us into the overbought territory and we'd be out of the supply zone. That would give a lot of people who, maybe want to sell from higher the chance to. But absolutely, that would also bring dominance up pretty significantly. Yeah, so, and I also look at the monthly, it's in the overbought territory. So it can stay overbought for a period of time. For the next 2 weeks, if the Bitcoin price wants to shoot up to 35K, this can be overbought. But then again, we filled all the gaps to the upside and we've opened so many on the way down. So that could be just, an elevator down. And we're just hitting all these gaps to tap liquidity for people who are longing late and close their short positions a little bit too late or got liquidated. So it'll be interesting to see that. The one thing I do really want to keep an eye on, that I think we all should be keeping an eye on, is the total market cap. So we're going to look at total 3. This is everything but Bitcoin and Ethereum. And, obviously on the monthly, it looks like shit, right? It looks like it's just going sideways. However, if we go on the weekly and we zoom in a little bit, we got a couple of things that are going on here. First, we got bearish divergence. The volumes are coming down here while the price is going up. We got the 50 and the 200 that are in very close proximity to each other. These have not crossed yet in this entire bear market. So that's not a great thing to be seeing because if they do cross, that's considered a death cross. We're famous for talking about death crosses and scaring people into, the apocalypse of crypto. But this is definitely this will be the first death cross at the the bear market, and we're putting in a parallel channel, but it's one with higher highs and higher lows, which tells me this is probably going to break similarly to how most of the altcoins have broken over the past 24 hours that we're putting in this in. So Bitcoin dominance continues to shoot up. Altcoins are definitely going to bleed out. This 50 is moving fast into 200. So if we get a break from here, so let's say we break down to the origin at least, which is down here at 292 billion. We're currently sitting at 331 billion. So say an 11% drop for altcoins, which is very possible considering here on Monday, the week of June 5th, we went from, our swing was from the open, all right, not even hitting the ruler. Our swing from the open to the close was 17%. So to move right here to, man, this ruler keeps deselecting down to here, 11%, it's possible. It's very possible for that to happen. And again, if we look at the daily, we're overbought. So I do think that we are going to be testing the bottom of this parallel channel. And if it doesn't hold, then watch out. We might be coming down a little bit lower. And that means that altcoins would absolutely bleed. Bitcoin dominance would probably increase. Trading pairs would get, absolutely wrecked. You'd have to keep an eye on Ethereum. Ethereum's been pretty strong lately too. I think that's been holding up pretty good comparatively to Bitcoin dominance. That's why dominance hasn't been able to get a foothold, I think. But for the most part, I think that's all you really need to keep an eye on going into this week. Altcoins, for my opinion, I think there's going to be a few liquidations back and forth. But for the most part, this is a really bad bearish setup for the total market cap for altcoins. If you look at the regular market cap for all coins in general, we could see that, we're kind of building this head and shoulders within a head and shoulder, which forms the right shoulder, right? We're coming down on the daily. And if we look at the weekly, we're coming up a little bit more. So maybe that explains why Bitcoin shoots up here, even though we're coming down here on this weekly. And then if we look at the monthly, the monthly is going to be, don't worry about all this shit up here. Just look at the stochastic RSI down here. The monthly is definitely going towards the overbought. So maybe by the end of July, we're in the overbought territory. We're putting in a parallel channel very similar to the other altcoins where we could see maybe Bitcoin go to 35K. There's no liquidity above 35K because everyone's long. So we got to go down. That takes this market cap down. Bitcoin drops, altcoins drop, volumes are low. So we're getting bearish divergence between the price going up volume's going down, and then all the money that was sitting below just starts getting tapped. So it's what I'm pretty much telling you is that there's a very bearish setup on the macro, and you just have to be careful. Doesn't mean that it's going to happen, this week, next month. It doesn't have to, right? This could play out for 2 months, 3 months before we start to see anything bad happen. But at least you're prepared and you understand some of the patterns that are building. And I think that we are setting ourselves up for failure if we are believing that the bull market is here and that altcoins are going to have a run. I don't see it based on these charts, and I think that we're seeing a lot of traps being played on the macro.
Don't get trapped. All right. I think that is a great place to wrap it up for today. Appreciate everybody for watching. If you have not yet, do us a favor. It's really appreciated. That like button, drop a comment, subscribe, share us on social media, all that good stuff. We'll be back tomorrow, same time, same place. Going to look at some of the numbers around the jobs data tomorrow. We got initial jobless claims, JOLTS report. That'll shed a little bit of light ahead of Friday's big number, the unemployment rate. So we'll be back. Appreciate everybody for watching. Have a great day, and we'll see you next time.
Take care, everyone.